Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do an update to the Las Vegas real estate market.
Okay.
First of all, we apologize. We know it's been a while since we've done a video. We have been vacationing. We'll skip all the details about where we've been for the last 3 weeks. It was awesome, though. But so we're back now.
Okay.
And we're going to jump right into the data today. Now, this is an update for Vegas. We're going to show you slides you've seen, and then I pulled some Fred charts because I needed to go beyond 5 years to give you guys perspective. Okay, so we'll start with the first chart here. This is the real-time market profile. This is the most current data for the week, just came out. What's interesting about this chart, I'm going to start with this per square foot. Now, I got asked in one of the videos, like I think it was the rent number, like why has it dropped so much? The scale of those little windows, they're not scaled the same. So here's an example. When you see per square foot, it looks like, if you just saw that, it would look like it's completely collapsed, but it's basically dropped about 1% in the last 3 months. Home prices tend to drop from like April to October, but then they go up October to April even more the next year. That's sort of the cyclical way home prices work in most of the country, right?
Right. And in some parts of the country, home prices continue to decline through the end of the year, and they don't pick up until the beginning of the year.
Yes, it depends on market, depends on a bunch of stuff. Vegas is one of those. October, November, inventory starts going away usually. Maybe October. This is the end of September, so we're probably going to actually see pretty soon here the inventory start declining again. The next thing on this chart that was interesting that I wanted to show you was inventory. We talked about this a lot. Inventory generally increases. And one thing it did this summer was it stopped going up. Remember, there was like a 5 or 6 week period where I think we added like 20 or 80 houses total, net houses. So houses were coming on the market, houses were selling. And then we go on vacation. And then while we're on vacation, it starts picking up a little bit again. But 4,774 homes is not a lot for Las Vegas, considering we have 400,000 houses or housing units in the Las Vegas area. Now remember, this isn't the whole MLS, this is just in Vegas, okay? Thought I'd point that out. Everything else on here is actually pretty normal for the trend this time of year. We're gonna jump right into this next one, price per square foot. Now, I've also heard this, but home prices are falling, they've fallen or whatever. Yeah, not really. Home prices today are basically about the same, I'd say they're about the same as they were this time last year. So basically year over year is zero. If they're down like 0.1 or 0.2%, that's all you hear about is home prices are down, but it's basically the same. But you could see they're above where they were in 2023, 2022, 2021, and then all the way over to 2020, all the way on the left of the chart. So we did say about 3 years ago, home prices would moderate. If you want to know what that means, that's exactly what this chart shows, right?
Moderate is another reason for remain boring, remain consistent.
Pretty boring. It's been a pretty boring market. Now, what we're going to do here, we're going to show you this next chart. This next chart is the market segments. Now, what's interesting about market segments is you see where it says new absorbed days on market. I don't know why. We got asked on the video. We're having more homes absorbed than are coming on the market, but the inventory has been going up. I don't know why the data is showing that, because unless there's something that this doesn't include, it's also possible that absorbed means it went under contract, but if it falls out of contract, then maybe, I don't know. I don't know that it's sales. I think it's going under contract. And I think it as a new MLS, a new listing.
Right. So it's not necessarily a new listing. It might be a new MLS number. So let me give you an example.
Oh, let's do a good example.
So let me give you an example. A house has been on the market for 3 months, and the seller's still a seller, but there haven't been any buyers, right? So a strategy might be for some agents and sellers to say, well, let's do a price change, and that'll trigger more interest in the home. Another strategy is to withdraw the home from the MLS and put it right back on the MLS with a fresh MLS number. So that there's some game theory in there. So that's part of what's happening in the marketplace.
Yeah, that's a pretty common thing, especially, people when they go on Zillow, they look at those numbers.
Mm-hmm.
Oh, it's been on the market for 97 days. Maybe it's something wrong with it, or I don't know what the deal is.
Mm-hmm.
That also doesn't include if it goes under contract. Like we had a listing one time, it literally came on the market. We got offers right away, it went under contract, it fell out. I think it did it 3 times.
Mm-hmm.
Like it immediately, as soon as we put it back on the market, went right under contract again. And the fourth time, they complained, like, why has it been on the market like 100 days? And we're like, it's been on the market like 6 days. Because every time it falls out, and I think it was falling out every time because the buyer's loan or something
Mm-hmm.
was not able to, it was a buyer issue. It had nothing to do with the property. It was a great property. But the people couldn't understand why this great house was still on the market. The other thing on here is days on market. I circled this so you could look at this. First of all, you notice that in the higher price ranges, homes are on the market a longer period than, say, the bottom quarter of the market. Why is that, Juana?
So just simple economics, right? More people can afford the lower price homes than can afford the higher price homes. The other thing that's happening is in the higher price points, sellers are more firm with their price. They are not in a position where they have to sell. So that's going to take a little bit longer to find the buyer who's willing to pay the seller's price.
One thing that is interesting is that there were more houses came on the market in the top quarter of the market than were absorbed, but then the bottom half of the market shows more homes absorbed. I don't know. The bottom line is we're going to have to sort of watch inventory over the next couple of months, total inventory, and see what it does. But right now we're in line. I've got a chart that I'm going to show you that's going to put this in better perspective for you. So I got a Fred chart, and the reason I did this is because I wanted to go back over time. This is housing inventory, median days on the market, Las Vegas, Henderson, Paradise. This is the whole metropolitan statistical area, the MSA. It's the whole area, okay? And this goes all the way back to 2016. The data goes to basically August is the last day. We don't have the September 1st data yet, so it's a month behind, but not bad. But this paints a pretty good picture. If you go down to the bottom, and these are in, I think they're in hundreds but the level shows the number of homes. And you can see here that this is median days on market. Median days on market. Median days on market is about in line with where it's been over the last decade. If you look 2021, 2020, first part of 2022, stuff was selling super fast. If you go to right after 2020 through 2023, remember that's when interest rates went from under 3 to over 6 or 7, right? Mm-hmm. In like 6 months, and everything kind of sat for a while. And then this is when the crash bro said housing crash. We said home prices moderate. Of course, we were right. But you can see that we went right back into a normal cycle of homes being on the market. So when people are saying, oh, but I heard no one's buying, they're sitting on the market. They're not. If you look at this chart, this paints a pretty picture that this is a pretty normal housing market.
Right. We're getting to a place where the market's pretty even. Sellers don't necessarily have the upper hand. Buyers don't necessarily have the upper hand either. It's property specific. So in some cases, buyers are making offers below asking price and they're being negotiated, and they end up at a place that both the buyer and the seller feel that they've reached a fair agreement. There are incentives happening, so we do see houses being sold fully furnished, but that's always been the case at certain price points. So I think it's a pretty even and fair market. If you're a seller and your home's been sitting on the market for a while, I'm sure you don't feel that way. I'm sure that you feel it's a tough market. And if you're a buyer and you've been looking for a home for forever and a day and you can't seem to find the right one, I'm sure that there's frustration there too. And that just kind of paints a picture of the market being pretty even.
The other interesting thing about this is all the peaks where the top of these are the fall and all the bottoms are the spring. Mm-hmm. Because homes sit on the market a little longer, right? Except for 2020, because that was the weird year where we all of a sudden just random stuff happened, and it caused some little differences there. This next one is a median listing price, and I couldn't find the median price per square foot looked exactly like our chart, so I didn't re-show the chart. But this is median list price. You can see, yes, from 2016 to 2022, we had a pretty good run up. Interest rates, of course, going up have tempered that, caused home prices to moderate. However, we have some data on interest rates we're going to talk to you about pretty soon that's going to shed some more light on potentially maybe the next 6 months or a year. But this is not unrealistic. But you can see we have basically been chilling the last 3 years. It hasn't been home prices going up, prices going down, just some seasonality. They kind of go up a little, go down, go up, go down. This is the active listing count. Now, this is for the whole area. It's not just for Las Vegas. You can see we have roughly the same number of listings we had at this point in time in 2019 and at this point in time in 2016. Okay? This is what's interesting. Juana, in 2016, there was no talks of housing crash. 2019, there was really no talks of housing crash or over too many houses are on the market. But remember, we had less houses in Vegas.
We had less houses. We had less people.
So there should be a lot less homes available for purchase. If we went back to 1905, when Vegas was first a city, there would be like 3 houses sold maybe that year in the whole area, right? Because there were only 15 people here. So it's not, our level inventory is certainly higher than it was a year ago, and it's certainly higher than it was during the boom time of 2021, but it's not super unrealistic right now. We do expect more inventory to come on the market maybe for the next month or two, probably start declining again.
Right. So you're going to have homes that will be taken off the market for the holidays. People have family coming into town for Thanksgiving, for Christmas, New Year's, or for whatever reason, they don't want to deal with having to show their home over the holidays. So you will see homes coming off the market, and then they will reemerge come the end of January. Generally speaking, they'll come back on the market, and we're off to the races at that point.
So here's the data on interest rates. Is, of course, you guys know the Fed just cut rates. They're talking about 2 more cuts this year, probably a couple cuts next year, maybe. Well, the loan market, lending market, we got these loan rates from, I think it's called Pacific Home Loans.
I think so.
And they're a local lender. We're not affiliated with them. They just send us the rates that they're, and I don't know what, this is not the rate you would get. This is just the rates they're advertising for some set of criteria. Okay. 30-year fixed conforming, that's your normal loan, maybe $500,000-$600,000 house. 5.75%, not unrealistic. Certainly it's not 2 or 3%, but 2 or 3% was never historically. This is still historically well within like normal, if not maybe a little below historic. A jumbo is 5.875. FHA and VA 30 years are 5.25. What happens if you do a 15-year fixed? Is it a higher rate or lower rate?
Generally, it's a lower rate.
You could get under 5% if you do a FHA or VA 30-year fixed. I mean, 15-year fixed.
Right.
And now, I'm not saying after 2 rate cuts or 3 rate cuts, interest rates will go lower, because this is a market function. The Fed rates that the FOMC sets are the rates that, overnight rates that the Federal Reserve banks charge each other, and it's actually a range. It's not a set number. It's a 0.25% range that vary. That's also market sets for overnight loans. So outlook with all this data, rates are not. I mean, remember we just had we had interest rates that were like 2% higher than this 3 years ago. That did not collapse the housing market.
Right.
We were probably told that home housing rate interest rates never get below 5%. And we're pretty darn close. These rates are not terrible. I don't know if you priced out rates, but they're pretty good. What do you think the next 6 months? Let's talk 6 months from now. It's now March. We're taking a bunch of listings, like we generally take a lot of listings in the spring. And what's going on there? What do you see March like? Do you see it being more listings than we have now? Start to get competitive, maybe a little bit.
I think it's going to be a very busy spring. I think there will be a lot of listings. I think there will be a lot of sales. I think there will be a lot of opportunities on both sides. The market's been very stagnant for a considerable amount of time, and at some point the dam has to break, right? And I think we're getting to that point. Interest rates are coming down. People kind of see that on the horizon. And sellers have been not very flexible and not moving forward with moving plans for a long time. So I think there's going to be more flexibility on the part of sellers. There will be more urgency on the part of buyers. And I think it's going to be a busy spring.
Anecdotally, we've talked to a bunch of people who are thinking of selling, and one of the key things we get is, well, if I can get this, I'll sell. And usually, some of the times we tell them, well, then don't even bother. You're just wasting your time. You're not going to get that, right?
Right. So
if it's a number you have to have.
Right. So one of the conversations that we have with sellers is, at what point are you no longer a seller, right? If you have to have this number and this number is beyond what the market can support, then at that point you're no longer a seller. You're someone's going to hang on to this property, whether you continue to live in it or you rent it out, whatever you choose to do with it, but you are no longer a seller at that point.
Right.
I want to talk a little bit about rentals because that was one of the things that you touched on.
Rental prices have been a bit softer than they were 6 months ago.
Right. And we're seeing that also in the time on market for rental properties.
Okay.
They are staying on the market longer. So not only are homes for sale staying on the market longer, but rental properties are staying on the market longer. So if you're a tenant out there, that might mean some flexibility on the part of the landlord. And if you're a landlord out there, this means that maybe you need to be a little more competitive.
Yeah. Have we had to lower prices on a lot of rentals or no?
On some, yes.
Okay. But not a lot, right?
No.
5%, 3, something like that?
Oh, no. Well,
like 2,100, 2,050 or something maybe?
Something like that, yeah.
We have a lot of rentals that are like right around 2,000 to 2,300, it seems like. That's sort of the sweet spot for rentals.
Right, yeah. So, I mean, they're in there. It just, they didn't generate rent increases with the turnover.
Right.
Okay. So hopefully that was interesting. If you missed us, thank you. We missed you. And please remember to like the video, subscribe, hit notification bell, share the video, and leave us your real estate related comments.
We will do more. We're going to get some videos out. We have a bunch of topics that are stuff that's happened in the last 3 weeks we want to talk about. So.
Okay, there you go. There you have it.
Yeah.
We'll see you guys on the next video. Bye.
Bye.